people are actually realizing that, hey, this First Mining Gold that's been around for the last 8 years is actually a pretty serious company.
I mean, what I keep saying to investors that we're meeting with is there is nothing that has got gold to 4,200 that's changed. And I don't think there's anything that's going to change in the macro environment that's going to make it a less bullish case for gold.
Now they're asking me, how high do I think it's going to go? And, you know, that's a toughie. I mean, who knows? But a lot higher than where it is right now, in my opinion.
Morning, good afternoon, or good evening, depending on where in the world you're signing in from. This is one of those events where we have representatives from 6 out of 7 continents, so I appreciate everybody making time in the middle of your morning, day, or night to join us and chat with us. I've got with me today Dan Wilton, CEO and Director of First Mining Gold, Paul Morris, Director of Investor Relations, and we're hoping in just a few minutes, we'll have at least for a couple minutes, Chairman of the company, Keith Neumeyer, also the CEO of First Majestic. But gentlemen, how are you today?
Well, thanks, Mario. Great to see you.
Awesome. So here's how today is going to work. I got a couple of quick questions that are going to come from me, but today is largely a town hall. I do want to hear from investors in the company, so please do jump on the chat at any point in the event. It'll be in the bottom right-hand corner of your screen. You can message any question you'd like. We'll try to get to as many as we can today. Because there's so many of you in the room, it's very possible we won't get to every question. But if that's the case, I'll make sure that the First Mining team gets them afterwards, and they'll be able to respond to you via email up to your or phone, according to the information that you gave on registration. But let me finish housekeeping and get into the good stuff. I'll get a quick synopsis, actually, of First Mining, just because I know about a third of the audience today are not part of First Mining's community. So new to the story, I'd love if we get a just quick synopsis for that crowd before we get into the news from this year.
Sure. Well, Paul, do you want to kick off with the quick synopsis?
Absolutely. I should point out that Keith has joined us. Hi, Keith.
Hey, guys.
Welcome. Glad you can make it.
Nice to see you. So, just a very quick synopsis, I guess, for the benefit of viewers who are not overly familiar with the story. This company was put together by Keith back in 2015, where I think in the space of around 15 months, he acquired 8 different projects, different companies. What we have done over that time, or since then, is monetize some of those projects. Actually, almost all of them. That has given us around $70 to $80 million, which we've put towards our 2 flagship projects, which is where our focus is right now. One project, Springpole, in northwestern Ontario, multi-million ounce project with very, very robust economics. We've recently updated the pre-feasibility study, and I'm sure we'll get to some of those rather attractive numbers during this call. And this is a project going through the permitting process in the latter stages, with expecting an EA decision at some point in the not too distant future. So very exciting there. And other project, our Du Parquet project, which is located smack bang in the middle of the Abitibi region of Quebec, a very, very sought after region. It's just mining everywhere there. This is also a multi-million ounce project. We completed a preliminary economic assessment on this project back in towards the end of 2023. Robust economics and exciting times. I'm the director of investor relations, and somewhat, as Dan knows, obsessed with our stock price. But we'll get to that very soon. So that's really it in a nutshell.
Awesome. Thank you so much, Paul. I appreciate that, especially for the folks in the room. Think about, like I said, a third of the 400 people here are new to the story, so glad you give that synopsis to start off with. But I do want to get into some of those attractive numbers right away. So I know for anybody who invested right after last year's end of year webinar, they've had quite a good year with the stock. I do want to hear from all 3 of you, but Keith, I'll start with you. What do you think the market finally noticed about First Mining this year?
Well, the equities lagged the gold price. Gold took off, almost 2 years ago and started to move, and the gold stocks really didn't do very much. And then over the last year, a lot of money started running into the last 18 months, started going into the majors. and the majors were hitting all-time highs, and the money just naturally comes down to the developers, and that's what we're seeing. And First Mining is in a very unique position. We've got 2 5 million ounce projects. One's close to permitting, and the market's waking up to that fact. And one is so close to infrastructure that it'll be a mine for sure. There's no question about it. So we have 2 5 million ounce plus assets that both will be producing assets over the next probably 5-7 years, something in that range, maybe less, hopefully less, but we'll see. No, it's a great time to be a mining company and great time to be a developer, and nice to see some money coming into the sector.
No, appreciate it very much, Keith. Dan, Paul, love to hear from both of you on the same question.
Yeah, I think Keith's kind of said it. Part of it is just the overall interest that has started to come into the sector. We always talk about the trickle down effect, and I think we're starting to get that now. Where what we hear from a lot of the newer investors who are coming into First Mining is, they might be new-ish to investing in gold equities, and they're looking for leverage. And as they're looking for value opportunities in the sector, when a lot of the producers are, as Keith says, trading at all-time highs, they're still reasonably attractive kind of by cash flow yield standards. And if you have a view that the gold price is going higher, there's certainly still some value there. But the reality is, like, you look back to the beginning of the year, and First Mining was trading at $7 an ounce in the ground for advanced stage ounces in real projects in tier 1 jurisdictions. So we always kind of knew that was going to change at some point. It was a lot longer of a journey to get that change than we ever thought it would be. But we just had our head down and doing the fundamental work to move the projects forward and make them better. And that's where I think that's really started to be recognized. And so for all that we're sitting today, with a share price that's up, 3 to 4x from where it started the year, it's still cheap, right? Like we're still trading at $30 an ounce, where our peers are trading at $150 to $200 an ounce. So, we can still see that real path to value delivery here, when the milestones and the major milestones, particularly on Spring Pole, we think are in the next 6 months. So, we just keep moving forward, and we'll talk more about some of the progress that we're making, but keep moving forward towards these milestones, and it's getting recognized.
And credit should go to the team. It's hard for investors to really see the amount of heavy lifting that goes on behind the scenes. It's unless somebody would hang out in First Mining's office for a week and to really see, or travel with Dan to all the communities in Ontario and Quebec, and talking to the mayors and the leaders within those communities, and all the government officials that the company has to talk with, both at the federal level and at the state or the provincial level. This is a lot of hard work, and we now have a light at the end of the tunnel, where we're seeing that this work that we've spent over the last 8 years, and the $100 million or so that we've invested in this project, the Spring Pole project I'm referring to, is looking like it's going to pay off like soon. And that's going to be a big catalyst to take the stock even higher, as far as I'm concerned.
Yeah. I should mention, I've been an investor in this company since Keith formed the company back in 2015. I actually joined the company as the director of IR at the beginning of 2021. And, I speak to investors all the time, and they would ask me, Paul, what's it going to take? Like, why is this stock not moving? You've got great projects, great jurisdictions, great economics. And, ad nauseum, I would say to them, look, we need the sector to come back into favor. And for that to happen, we need higher gold prices. And while that won't immediately guarantee a rotation of money into the sector, the higher it goes, the more likely that's going to become. And I think what we've seen over the last little while is people are starting to take note. And, we've seen the share prices of producers already move. as Dan alluded to just a few minutes ago, it normally trickles down then to the companies like us, developers, and then the explorers. But Dan and I were at a conference in London. Gosh, I've lost track of time. Was it last week?
Before last.
This week before last. And I was listening to someone, Ronnie Stofeli, present the story. And one interesting fact he mentioned was, while we've seen the price of shares of actually producers, developers, and explorers move somewhat, there's still a lot more room for them to move. And he brought up a slide that showed that the GDXJ, the Junior Gold Index, and the GDX have net outflows, still have net outflows. And while we've seen the share prices of gold and silver miners move, it said, imagine what will happen when those inflows, they turn to net inflows. I think the potential is huge. And I'm more excited with the share price now than I have been. But, I think lots to come.
There you go. I have one question, and it's forward-looking, it's crystal ball gazing, it's all the fun stuff, but it also reflects a lot of the questions that are in the chat and came over email. And that's, like I said, anybody who invested after last year's end-of-year webinar has seen great returns. After this run, is there room to grow in the short and medium term? I know you guys have all alluded to it so far, but I'll ask it directly to Keith first, and then I'll throw it to Dan and Paul.
Well, I would imagine that means room to grow the share price. Is that what that's referring to?
Yeah, that's right.
It's absolutely 100%. It's the company has a market cap of approximately $600 million. Spring Pole alone, if it was by itself, permitted, it would have a market cap of $1 billion, ready to break ground. And Du Parquet, would be a little bit behind that. But Du Parquet in some senses is actually a little bit easier than Spring Pole. Du Parquet is right on a major highway. It's surrounded by infrastructure, power lines. And the grade is better, so it's likely going to be a lower cost producer. And with all the infrastructure in place around Du Parquet, it'll likely be in production a lot faster than Spring Pole, even though Spring will break ground on Spring Pole first. It'll be very interesting to see which one actually is producing first, because I think the build out at Du Parquet will be faster. But nevertheless, we still need permits at Du Parquet as well, and we're getting there with those ones. And the amount of groundwork that the company has done, and the name is getting recognized. The analysts are starting to pick it up. The institutions are starting to come into the stock. People are actually realizing that, hey, this First Mining Gold that's been around for the last 8 years is actually a pretty serious company, and it's really worth looking at. And the money's coming into the stock. It's obvious. And of course, being the founder and the chairman, of course, I think it's cheap. And who knows where it should be trading? But I could easily see a $2 or $3 stock. I think that's reasonable.
Yeah, the one point I'd make to Keith's analysis about the value of Spring Pole. Now, every deposit is different, but if you look at advanced stage developers with kind of comparable size projects, you look at the market cap of Skeena today, which pre-construction is about $4 billion, right? And that's, when you look at sort of the total ounces that we have, it's pretty comparable between our two projects. Now they have a 3-gram open pit, and I get that. That's it's got exceptional grade. But just to say, I don't think there's any cap on a pre-construction value here, because again, historically we've seen these companies trade at pre-construction values of $100 to $200 an ounce. Pretty consistently across cycles. And a lot of that in gold price environments that are not the gold price environment we're in today, right? So I think, I I think when we talk to investors and point out, like, listen, we're at $30 an ounce today, and the peers are trading at 5 to 7x that, like, I think it gives you a pretty clear line of sight on where we think the company can get in the next 3 to 5 years, with a lot of these real milestones now, kind of within the next 6 months.
Awesome. Paul, I'll leave it to you for any last thoughts on if you think the stock's got room to grow.
Oh my God, absolutely. I mean, look, first, I think the generalist investors are just starting to come in. The other thing is also, and this came up a fair bit when I was on my recent travels. You look at crypto investors or Bitcoin investors, and I think they're starting to look at gold stocks, and that I think can really have a profound impact on our share price. But as Dan mentioned, and this is probably the metric that I use with when I speak to investors, currently trading at $30 an ounce. Our peers are trading between $150 and $170 an ounce. I think that in itself shows some tremendous upside on the stock price. Also, we're trading at, around 0.15 our net asset value when we're using a gold price, the recently revised or updated pre-feasibility study. We used a gold price of $3,100. Our previous PFS was done at $1,600 gold. But anyway, around 0.15 times net asset value at $3,100 gold. We know gold is right now over $4,200. But developers like us would really trade probably between 0.5 and 0.7. So from that metric, at $3,100 gold, that also implies some very good. In our slide, we use re-rating potential. I like to use the term capital gains potential. That's me as an ex-stockbroker. Yeah.
The other thing, and we've alluded to it a little bit here, is the company is still institutionally really underheld, and as Paul and as Keith have said, we're starting to see these institutions looking at First Mining. I think there's still a lot of the institutional investing world that is going to wait until environmental assessment approval before they decide to invest. I think it's just a reality. I think there's a number of investors who just don't feel that they can handicap that risk and don't want to be wrong, even though the risk reward, I would say, looks pretty positive right now. So I think that's a huge opportunity for other investors who are sitting today, knowing that there's a bunch of people waiting for these outcomes that are coming, we're anticipating coming in the next 6 months. This is a really good time to get positioned, I think, because there's no reason why we shouldn't see our shareholder base transition from 20% institutionally held to 50 to 60% institutionally held. And you imagine you have someone or a group of, the largest gold investors in the world, all trying to acquire your shares at the same time, and up to the point of wanting to buy 40 or 50% of the company. I think that's going to have a really, really solid underpinning on the trajectory of that valuation.
Sure. No, appreciate that very much. Now, I do want to zoom out and talk about macro for a second, because as we'll get into soon thereafter, First Mining does have pretty remarkable leverage to the gold price. I know gold price already surprised everybody, I think, except the most aggressive bulls by going past 4,200 and then settling around 4,200 for quite some time now. But I'm curious for the three of you luminaries in the room, where you think it's going to go next. And Dan, I'll start with you first on this one.
I mean, what I keep saying to investors that we're meeting with is there is nothing that has got gold to 4,200 that's changed. And I don't think there's anything that's going to change in the macro environment that's going to make it a less bullish case for gold. As we've come through this, there's a lot of people who are saying, well, this is really all just war premium that's crept into the gold price. And if we ever actually have some kind of settlement in the Middle East, the gold price is going to collapse. Well, it kind of happened, and it hasn't. As I understand it, President Trump has solved a number of wars around the world recently, and yet still the gold price is where it is, right? I don't think that rush to safety was a driver of the supply and demand and the fundamentals. It's really been central bank buying, looking for an alternative to the US dollar, number one. And number two, we are starting to see, as those are kind of paying attention to what's going on, particularly with Tether and the crypto space, these, both a propensity toward what I think is going to be a very interesting, call it, gold-backed currencies, gold-backed, stable coins, and just the, what Tether's buying into its own accounts, basically with the interest income from the other stable coins that they have that are more fiat based. Like, Tether's buying as much or more gold than the Chinese central bank right now, and it is accelerating, right? So I think what we are seeing is, and Paul alluded to it before a little bit, with some of the kind of, call it, convergence of the rationale, the crypto world and the gold world. Some of that convergence really is coming into, the gold price. And I mean, and it's not just gold. Obviously, we're seeing silver very similarly moving up. And there's, we're going to talk about silver forecasts. There's only one guy I'm going to look to on this panel who's going to give you that. And it's a guy who produces it and mints a bunch of it. But no, where do I think it's going? I would be very confident in a $5,000 gold price next year. And I think, I've always kind of thought peak to trough analysis. I've always thought $7,000 was, in this cycle. And I think my bias would be, if governments are still borrowing way more money than they're ever going to be able to pay back, and fiscal situations is deteriorating as it is all over Western Europe and Japan and North America and many other places, I just don't see anything that's going to change the trajectory of gold right now. So, I think it's a great place to be with assets that have huge leverage to the gold price like we do. And just so we kind of get the numbers out there, in our study at $3,100, Springpole had a net asset value of $2.1 billion. At 4,200, that was $3.8 billion. So you're talking about almost doubling it on $1,000 of gold price. And so you think about what happens when you see the next $1,000 of gold price, like, there's significant leverage there. And I think that's where, we're starting to see some of that, the investors looking for, value in the sector, the value and leverage argument. I think we're a very good asset for that.
No, appreciate that. And Keith, like Dan said, you're the guy people look to for silver price predictions. And as somebody who bought a number of First Majestic rounds when I was at Frankfurt, I'm eager to hear what you think about precious metals prices in your future.
Well, currency debasement is here to stay, or at least, as far as we can tell or foresee. Governments around the world aren't going to be changing anytime, as far as we could tell, and that's a big problem. And then you've got security issues around the world as well. Governments want security and they want to be independent, and gold gives them that independence away from the fiat system. And so that's what we're seeing right in front of our eyes. It's hasn't happened quite like this for generations, and this is a generational change. This move is a 10, 20, 30-year move. We're likely going to see 5-digit silver. Who knows what that means. Rickards is calling for 23,000. He's been calling for crazy numbers for a long time. I know that, but I don't know. Look, my prediction has been on the table for a couple of years, and I said $5,000 gold, $100 silver by 2030, and I think that's a fairly conservative approach. It may happen the way this gold price has moved so quickly in the last 12 months. People are saying that we're going to hit 5,000 next year. It could very well do that. I hope silver doesn't hit $100 next year. I think that would be too fast of a move, but it's possible. Silver and gold are two different metals. I look at gold as a currency, and I know when I say to people that I don't look at silver like a currency, I know I lose a lot of people, and they shake their head and they go, Neumeyer's like, he's crazy. But I don't think there's enough silver on the planet for silver to ever become a currency. There is in gold, you just reprice it. I suppose potentially you could reprice silver, but you'd have to reprice it to some kind of crazy number. Then what are you going to do? Have a coin in your pocket that is worth, $5,000? It's just not going to make sense. So, anyways, 70% of silver is used in industry. We've had 6 years of deficits in a row. It would take 10 First Majestics to fill that deficit, and that's kind of my full-time job. But Dan and I have been working on this project, First Mining Gold Project, for over 5 years now. Both Dan and I have quite a lot of our money in this project. Both Dan and I have been financing this company for the last several years, and including Paul. He's put money in himself, and it's really nice to see the efforts over the last 8 years are slowly coming to fruition. But it's going to take more time. Still going to take a lot of work, but it's nice to see what's happening in the space.
No, appreciate that very much. And Paul, I'll let you get in a second, but Dan, I know I'm lucky enough to hear you explain this a number of times in a year, but some people only join us for the end of year webinars. Can you explain, leverage to gold wise for First Mining, what a $100 increase to the gold price means for First Mining's value?
Yeah, I mean, and some of these numbers are fresh. The Dupliqué numbers are a little bit dated, but I think still relevant. So $100 in the gold price equates to roughly $250 million of after-tax net asset value to our shareholders. So, the 250 million US. So you put that into, Canadian dollars, it's another, call it 25 cents a share in fundamental value for every $100 in the gold price, which is pretty remarkable from where we are now. Now, keep in mind that number today at a spot price basis, it's probably $6+ a share of net asset value at $4,200 gold. And you can buy the shares for 50 cents today. So that gives you a bit of that, just a sense of what that trajectory looks like. But again, you think about it goes up by another $1,000. It's another $2.5 billion US of after-tax net present value of those projects, right? So, and important to understand that leverage is an important part. One of the things that's equally as important, and I think will become in the next year or two more important, is the scarcity of big projects, and particularly the scarcity of big projects in good jurisdictions. There are only a small handful of projects that are going to have the ability to be built in Canada, the US, or Australia, which is where every mining company wants to own projects. There's a small handful of projects that could be built in the next decade, let alone, in the next 5 years. And that's why, with Springpole rounding the corner on the EA, the scarcity value of these large projects is really coming to the fore, because we're starting to see a lot of these big projects getting acquired by people who we didn't ever really think were going to come in and buy these projects. It happened again this morning, actually. Our friends at Equinox Gold have sold a bunch of their Brazilian assets to CMOC, which was like the Chinese molybdenum company. So we're all clear, that's who's coming out of the woodwork to buy gold projects now in Brazil. And I have a bit of a soft spot for at least one of those projects, because in a prior life as a fund manager, we owned it and kind of saved it from bankruptcy and got the project, ready to rebuild. And it was one of those kind of foundational pieces inside Equinox. But you're seeing Fresnillo come and buy Probe in the Abitibi, right? these companies that we didn't think were ever going to be the ones that are driving the value are the ones who are showing up to do these, these really large deals. And it leaves every one of the other mid-tier and large cap gold producers looking around to say, well, where am I going to add the next, platform for growth? Because they're all going to struggle to be replacing their reserves because they haven't spent the money on exploration that they needed to spend over most of the last, 10 plus years. I mean, First Majestic is a bit of an outlier. If you look at kind of the number of drill rigs that are turning at any one time, I mean, it always amazes me the amount that Keith and the team have continued to spend on exploration, and sometimes had to fund that, in ways that weren't just free cash flow to make sure that they were growing the reserves. But that's not normal in the sector. And it's certainly not the average. So I think we're coming to a point where we really are going to see the scarcity value of these large projects start driving what it turns. It drives valuations much closer to 1 times net asset value than 0.1 times net asset value where we're trading today.
Great. Paul, if you have any last macro thoughts before I get into recent news at First Mining, I'll throw it to you.
Honestly, I think both Dan and Keith probably said everything I would have said. The only thing I got to say, one person I should refer the audience to, if they look up our friend Ron Stoefferle, Stoefferle, In Gold We Trust. Do a YouTube search and listen to what he has to say. There are lots of webinars. I was listening to him in London 2 weeks ago, and he's calling for the next couple of years for gold to hit the $8,000 mark. Yeah, that happens. Well, Dan talked about our the leverage of our projects to the price of gold. And Keith mentioned he could see this being $2 or $3 stock. He didn't say Canadian or US, but I think easily attainable.
No, awesome. No, appreciate that. I did want to. Oh, sorry, Keith. If you had something, go for it.
What?
Nope.
Sorry. No, it's fine.
I thought you had something. I do want to get from Dan and Paul. I know we didn't have a chance to talk about it because it all came through so quickly. There's been a lot of news from the company recently. The Cameron sale, the updated PFS, Deep Parquet drilling, etc. So I'll throw it just for an update for folks in the room who may not have kept up with all the news. Dan, I'll start with you, but also what you think all it means for the stock in the near-term future.
Yeah, so let's kind of tackle them one by one. So PFS update, I think, is an important resetting of the benchmarks of the financial robustness of the Springpole project. And there's a couple other things that I think investors will likely see here coming forward, which is what the spin-off socioeconomic benefits are from the project that are driven by these project economics. This project has the potential to be one of the largest economic drivers of Northwestern Ontario for a generation. And I think it's important that people understand that. In an area that's suffering right now from the real downdraft in the forestry business. So this is jobs and major economic growth for the region. So that's, I think, important. But, the PFS was important for us to kind of get the economics of the project as we have it scoped in the environmental assessment, get those out, because the previous report was done, priced largely in the middle of COVID, and there's just a lot had changed in the design of the project and in the costing environment over that time. And I think, what we've seen on the back of the announcement of this PFS update is just a recognition from a number of investors that, this is one of the biggest and most robust projects in Canada. So I think it was important for us to kind of get that restated with fresh numbers. More work to come, obviously, as we take the project through in our next stages to feasibility study. We'll talk about that in a minute. But that's, that I think was very important. The Cameron partnership, and we're very excited about how the Cameron project's going to move forward. we always loved the project. It was, Keith, I think it was the last project that First Mining brought in the acquisition phase. It's in a great location. It's got amazing geology, but by virtue of its size and by virtue of the fact that we have Springpole and Duparquet that already kind of have that critical mass, we always struggled to find the capital and the focus to move it forward. So the important thing about this is getting a great team. We're partnering with the Fiore Group and Frank Justra and Sean Kunkun and that team. Obviously fresh off a number of wins, but very active in the region. So it's the same people that have been behind West Red Lake Gold, the same people behind Next Gold that have the Goliath project, which is only about 100 kilometers away from Cameron. I think we're still going to be very involved, right? We're going to be a 48% owner of the project going forward. Some really interesting things to come there, but I think it's one step at a time on Cameron. It's, we need to get back out doing exploration, have a fresh team with a fresh look at what the resources are and how they can grow. But for us, I think it's just another in a long line of moves that we've made for the shareholders to be able to really just kind of highlight the value of these other assets that we've had in the company that for years and years and years we got no value of. So, I mean, ultimately, what do I think that our project interest is going to be worth there? Well, I think it's well north of the $20 million of equity that we're taking for it, right? Like, I could see this being worth, the company being worth $200 or $300 million in a couple of years as they start demonstrating the resource growth there. Because it's a project that really does deserve to be moved forward. So that's also exciting. And then, last but not least, more exploration results at Duparquet. I think we've got another, call it a final set that are likely to be coming out early in the new year. But what we've defined at Duparquet is that there is an entirely open exploration horizon on the contacts of these big cyanide intrusives that no one's ever looked for because they didn't need to. Because from 1933 to 1956, like, they mined in the cyanites, they always knew what was in the cyanites. Osisko went in and drilled the cyanites, Clifton drilled the cyanites, but they never drilled on the edges of it. And we're finding on the edges of these things, like 20 meters of 3 grams from surface. Like, if those were in a standalone company in this market, like, just those drill results without a 5 million ounce resource would be a 100 to 200 million market cap company, right? So, not to mention that, the owners of big resources in the Abitibi are kind of getting gobbled up. So yeah, no, I think there's some really interesting news to come from Duparquet going forward. But we'll talk a bit about that as we talk about next steps there.
Sorry, I just want to go back to Springpole. The producers are making huge free cash flow right now. They need to replenish their reserves. And what makes Springpole attractive? Well, I just want to mention a couple of numbers from our updated pre-feasibility study, which we did at $3,100 gold. After tax net present value of 2.1 billion US, and Dan talked about the leverage. But I think what's really, really important is this is a project that in the first 8 or 9 years can produce on average probably a little more than 300,000 ounces of gold annually. That is significant at all-in sustaining costs of less than $1,000 US. The margins are phenomenal. So, I think when I gave my little synopsis right at the beginning, I said very robust economics. I'd say that's pretty robust economics. It makes it a very attractive project.
Certainly sounds robust. I'm going to throw it to all three of you here, because I know you guys did a lot of the conference circuit from Colorado through to Zurich and London, Frankfurt. And I know the word sentiment often feels like tea leaf reading in mining, but I do think it's important to discuss. So Keith, I'll throw it to you first. And What were you experiencing at the fall conference? What were people telling you about where they think the mining sector is going?
Well, they're asking me, of course, but no, everyone's got a smile on their face. It's which is really nice. Over the last decade, two questions I got all the time was, when silver price is going to go up, when's your stock going to go up? So you sit there, you have 20 or 30 meetings over a couple of days, and half of it is about silver and why is it lagging, why is it not moving, and the other half is why is your stock not moving? So with so many great things going on, the fact of the matter is there's no money that was coming into the mining sector at the time. All the money was chasing NVIDIA and high tech stocks, and no one cared about what we were doing as a mining company and what first in both cases of First Majestic and First Mining Gold. No one really cared, and now sentiment's changing. You still see a lot of a lot of the old faces that we've been seeing at these conferences forever, and we're friends with them. We know most of them. Many of them are shareholders of both companies, and so we sit down. We have great conversations now, and everyone's, as I said, everyone's got a smile on their face. But one thing we are now seeing is new faces are showing up, and there's a lot of young people as well, which is quite fascinating. I think I've seen over the last year more young people showing up in these conferences than I've seen ever. So that's pretty encouraging.
No, that's great.
Yeah,
Dan, I'll throw it to you.
I was just going to say, as a director of investor relations, I've spent the last 4 or 5 years chatting to investors who, would say, as Keith just said, when's this stock going to move? Now they're asking me, how high do I think it's going to go? And, that's a toughie. I mean, who knows? But a lot higher than where it is right now, in my opinion.
You go, Dan. I'll throw it to you for where were you hearing across the United States and Europe as you talk to people in the industry?
Yeah, I mean, I think certainly from an investor perspective, it was really around like a real focus on milestones. Like, where are we? Are we going to get to the finish line with these milestones? Because, how can the stock be this cheap? There must be something wrong. And I think that's part of when we see that sentiment change. I've described it in the past as, the active disbelief of investors. Like, they just actively disbelieve everything that you say, and that was kind of what was coming through in our share price for a long time. I'd say we have less active disbelief, although there's still a lot of people on the sidelines, particularly on the First Mining story, kind of waiting for delivery of performance against milestones and catalysts. So, but I'll tell you, it's the first time in my career, and it sort of it started at Beaver Creek, where our first meeting at Beaver Creek, our share price was still 20 cents. And at the end of the week, our share price was 32 cents. And so, pretty excited about that. It's a pretty big move. And then, it seems we kind of get to these, to the next conferences. We're doing some institutional marketing and have, I think a few funds that are starting to kind of build position, and slowly but surely you just kind of see this, the kind of the robustness in the share price, where historically any little downdraft was a reason for everyone to lose all faith and, everyone sell. And now little downdrafts are met with lots of buying that came in, and not least of which we put out our PFS update, and there was a real rollover in the share price for a couple of days, in which Keith ended up buying another couple of million shares, because he's like, this is crazy, this makes no sense that you put this out, and like, that's it. So he was in the market buying, and that was in the mid 30s, and we've hit 57 in the last couple of weeks. So the sentiment has changed for sure. The sentiment has changed, but I think there's still a lot of room for us to go, and what we need to do, as a company, is keep moving forward, keep doing the things that we've been doing, keep doing the work that we need to do to move the project through to these major milestones, which are coming in the next 6 months. And I think once we deliver those, it's going to open up, open up the investing world significantly. So yeah, from our perspective, it's delighted to be doing this in a bit of a tailwind environment. This is I can think of maybe 3 other months since we've been doing this, maybe 6 months in 2020 where we had like a real tailwind. But I've also been around this industry for 2 or 3 cycles and know what it feels like when you really start getting momentum coming in. And I'm not sure we're there yet. As Paul said, the GDXJ and GDX have still been seeing outflows. Like we haven't seen that real popular sentiment turn. And when it does, again, all of the gold price is where it is, or the gold price is going up. There's multiples of return on a lot of things mining related, for sure.
Well, now I know. Sorry, Paul. Only because we have 15 minutes left.
I just had a thought. Sorry, because I mentioned Bitcoin or crypto investors coming over to the gold space. Keith mentioned right off the bat, we could be a $2 to $3 stock. Let's say that's Canadian dollars. I'm sure he meant US, but let's say it's Canadian. That's 5 to 6 times where our stock is currently trading. And I look at Bitcoin at, what is it, $90,000. Can I see that going to $360,000, $400,000? I weigh things that to me sound. Does that sound reasonable or feasible? Anyway, my money's on First Mining.
Well, appreciate that very much. Dan, I want to clear up, I think 75 to 80% of the questions in the chat all at once by asking what the upcoming catalysts are at both Spring Pole and Duparquet.
Yeah, so for Spring Pole, we're very focused on moving toward the EA decision, which we're targeting for Q2. We've been saying Q1, Q2. I think it now solidly looks like a Q2, but everyone's dates are kind of firming up on that now. And that's just, I think, in large part because of the recognition from all parties, including those that have to give the approvals, recognizing the amount of work that the Indigenous communities that we're working with have been doing. Their own processes are progressing well. Still some important discussions that we and governments need to have with the communities around whether it's accommodation measures, participation, and from our standpoint, ultimately, our real goal to come to long-term relationship agreements with the communities. So there's still lots of work to be done on that front, and some of that stuff just can't and should not be rushed. But again, there's a few milestones in that process. So at some point, we will see the draft decision document for the project be, certainly on the federal side, be filed publicly for a public comment period. That, I think, will be a pretty important milestone and just demonstration of kind of where we're marching forward to on the timelines. But no, I think it's kind of all eyes on what we're going to see, hopefully in the lead up to that EA decision, which for us is some demonstrations of community support, and then ultimately that EA decision coming. So at Duparquet, so we'll take a step back. The rest of the work program at Spring Pole for this coming year is really focused on the rest of the data collection that we need for the feasibility study. So that work is started now. We've got about 70 drill holes, most of which are sort of geotechnical and site characterization in nature, but we're making good progress on that. And so we'll have those, some of which are going to need to be drilled from the ice. So that most of that work is done in Q1, early into Q2. EA decision Q2, and then really driving on to that feasibility study with a goal that we'd have a feasibility study done really kind of by the end of 2026. And from there, you're into the rest of your detailed permitting and project financing discussions, and further into what could be a construction decision late 2027, early 2028. So lots that will continue to come, but the major milestones at Springpole are really driven by what's coming, in the EA decision in the first couple of quarters of next year. And then at Duparquet, as I said before, another sort of final round of drilling results from our drilling of this year. We're continuing on collecting environmental baseline data at Duparquet, which is a really important field program for this year to get ourselves ready to enter into the EA process in Quebec, and driving towards what would be all the data that we'd need for a pre-feasibility study, moving to a feasibility study at Duparquet. I don't think we get that study done in 26, but the goal is we have collected all the rest of the data that we need, which is some more drilling, some geotechnical work, some geochemistry, site characterization, and some really important work with the community at Duparquet. We signed this agreement in September, which is really important for us as an opportunity to develop the mine and develop the town together. So a lot of that work is actually looking to kick off early in the new year, and just phenomenally exciting to think about how the town and First Mining can collaborate on where we're going to put the infrastructure, what the development's going to look like, and imagine you go into these processes with like a real plan that's all agreed by everyone. And if we had the ability to turn back time, we'd have loved to have been able to do the exact same thing at Springpole, starting like right from the beginning with the community buy-in. But we're doing a lot of that work now, and we'll get there. But that's really on Duparquet. There'll be more drilling next year, but it really is around kind of that vision that Keith was talking about, where it's time to really start advancing Duparquet and have great support from the government of Quebec to really kind of start talking about how we move that forward on a pretty fast track.
Awesome. No, appreciate that so much, Dan. I think that clears up a good number of the questions. Now, that being said, there are tons of questions left with 9 minutes. There's absolutely no chance I'm going to get to all of them. So I will make sure the team gets them. I'll send them all directly to Paul afterwards. But I'll get through a couple of key ones. And this one is to whoever can do, I guess, the fastest napkin math on this. But Michael asks, what would you guess that First Mining's Tier 2 projects, so anything other than Springpole and Duparquet, are worth in aggregate on a per share basis at today's gold price? So if anybody's got a guess for that, I hate making you guys do math on the spot.
Well, I think Dan answered that question earlier. I think he came up with $70 an ounce, which would put the stock at about $6. So.
Yeah, no, the $6 would be a little bit more than that, and that was with everything. But you're just talking; they're basically talking about Cameron, Pickle Crow, other odds and sods. What I would say, what are they worth today? Are 30% interest in Pickle Crow, and what's going to be a 50% interest in Seva Mining? What are they worth today? I don't know. $50 million. What could they be worth? I mean, that's just like simple metrics today.
Sure.
What are they really worth? I think it's multiples of that. And I think, the more work that gets done on those projects to demonstrate a path forward. I mean, we never really talk about Pickle Crow, but it's one of the largest high-grade underground gold deposits in Canada. So, we're excited at some point for, I think, our friends at Firefly to help breathe some new life into that. But yeah, no, there's definitely in this environment, or the gold environment that we're talking about, on a per share basis, could we say that those are worth, I don't know, 10 to 20 or 30 cents a share, like when they realize kind of the full value of them. So, they provide us, and in the future will provide us with a little more financial flexibility, like the other assets have done, given us that critical financial flexibility to withstand going through 7 years of a miserable market downturn.
Awesome. No, thank you very much. I think that's a great answer.
James, just Romeo, there, a number of questions are coming in related to M&A and, potential partners. And, I think that, the audience should be aware that, we travel extensively. We know the mining industry inside and out. We know all the players within the mining sector. We watch them, they watch us. It's a pretty small, tight community. And As First Mining, de-risks their two core assets, you never know when a partner is going to come in, or if one ever does come in, or you never know if you just got bought out at 100%. These things, that's not the purpose of you going to work every day. You don't just wait for that partner to come in the front door to take you off, your project. We're taking these projects to production. That's what we're going to do. And what that looks like with a partner, or without a partner, or with a bank or without a bank, we're not in a position to answer those types of questions yet. But I can tell you, Dan's always talking. The team is always talking to ways we can get these mines up and running, and that's the whole focus.
Yeah, and I'd just say on that front that it's a very different set of opportunities in front of us today than there were a year ago, right? Not just because the projects are more advanced, but got a market cap that is multiples higher than where it was as well. So I think Keith's exactly right. Finding a partner or selling a company is an outcome. It's not a strategy, right? There are things you can control in this world and things you can't. So we need to be moving forward on the things that allow us to move the projects forward. And there are some of those other discussions that sort of come to fruition. We've been pretty open about being open to having a partner come in. I think there's a lot that could be very good about that. But that's something that I think the real timing for some of those discussions is going to be when we've taken as much risk out of the project as we can. And you certainly wouldn't expect to see anything until you've got some of these major milestones in the next 6 months that you're through, and the share price is reflecting that in the valuation.
Awesome. And thanks, Keith. I appreciate that. I know that was a lot of the questions that were still sticking around in the chat, and thanks for jumping in yourself to answer some of the ones directed at you. One question from the chat that I'm going to close on today to give you all one last opportunity to talk about First Mining is John from the chat says, please make Paul's Christmas very merry. He's busted his ass this year for the company. So
what was that? Say that again.
John wants to make sure that you specifically have a very good Christmas, Paul, because he appreciates your work. But I wanted to ask all of you, what are you most excited about for next year? Keith, I'll start with you, and then we'll go with Dan and Paul just to wrap us up.
What was the question? I didn't hear you. Sorry, Roman.
What are you most excited for next year at First Mining?
Well, just getting the milestones. There's EA milestone. Don't forget, this is 8 years in work, and we've had to collar caribou. We've had to, have people, collect fish specimens, where pick flora and fauna, and do water studies. So the amount of work that goes into getting a permit for a mine is just absolutely enormous. And $100 million in 8 years of hard work with a very solid team that have been working with the government and the local and indigenous groups, to get this over the line. It's happening, and we can see it's happening. So I think that's personally the most exciting thing that's going to happen for First Mining in 2026.
Awesome. Thanks, Keith. Dan, I'll throw it to you. Same question.
Well, yeah, I mean, I think there's a couple of things that we're really excited about, but mostly, we're very, very focused on bringing this EA process to its conclusion. And what I'd be really excited about is getting to a point of agreements with the communities that we're working with, and be very excited to get that community support. That's still a process that we need to go through, but I think I think again, the extent, as you say, coming to the conclusion on some of these milestones that have been many, many years in the making, and then open up what is, I think, the really exciting part of how we drive forward at Springpole is going to be very exciting. And then at Duparquet, I'm always going to be excited about the ongoing drill results that we're going to see there. Be very excited about how we start really kind of taking some of the concept at Duparquet and start it down this path towards, something that can be a real productive mine and bring a lot more, jobs and energy and infrastructure to the communities there as well. So yeah, 26 is going to be a very, very, very big year for First Mining. Still lots for us to do, but yeah, there's a lot that I'm excited about for next year.
Awesome. And Paul, I'll leave it to you actually to close off today on what you're most excited about for 2026.
Well, I'll tell you what I'm really excited about is some of these catalysts that we've been talking about coming to fruition and becoming well reflected in the stock price. Because you know what makes me happy? Happy investors. When I speak to happy investors, when I was a stockbroker, that drove me, and it's the same here. And I've got to tell you, it's been a pleasure lately, a great pleasure. I mean, it's been a pleasure since I've been with the company, but certainly a pleasure lately as our stock has moved. But, I'm really looking forward to what I think is in store. And just in case you weren't going to mention it, but, please, anybody who's listening who would like to talk to me or whatever, please send me a message, send me an email, and I will get back to you quickly. It's Paul, Paul, for those who don't understand my English accent, Paul at firstmininggold.com. So Paul at firstmininggold.com. I look forward to hearing from you.
Awesome. Well, Keith, Dan, Paul, thank you so much for this end of your webinar. I think this was a lot of fun. I know there were so many people in the room and we couldn't get to every question, but I'm going to send them back to Paul. And like he said, and it's true, I've seen it, he's one of the only people in the industry who will definitely get back to you. So appreciate everybody's time today and hope you all have a wonderful end of the year, but end of the week as well. So have a great day.
That's great. Thanks, everyone. And thanks, Romeo.
Thanks, everyone.
Thanks very much. Thank you.
Merry Christmas, everyone.
Merry Christmas.
Absolutely.
Merry Christmas.